So we're going to talk about Tangerine Dream. For anybody that's been here before, you know that I tend to link things back to the 1970s because I keep making the point there will be an echo to the 1970s. And I'll explain how we get to the fabulous and well-followed Tangerine Dream band. So why am I talking about politics? So I've got a quote from Ralph Nader, who was a US politician. He was a presidential hopeful at one point, but he says that you may not be interested in politics, but politics is most certainly interested in you. And a lot of the events we're beginning to see, as you can see from here, so the top headline on the left is from the Financial Times, explaining how companies, rather like us, that have a lot of mathematicians and physicists on board, are beginning to have to factor in more and more political considerations, more social political considerations. So you can see a number of other firms also making similar points, and also just for your businesses, for your lifestyle. As you can see on the right-hand side, we're beginning to get to the point where you are being asked to potentially pay more taxes as a result to try and rectify some of the problems that are growing in society. I don't think it's going to work. I'm going to explain why I don't think it's going to work. But also I know some of you in the room, you're beginning to kind of consider, do you actually want to hang around and watch what happens next? We do offer overseas services, by the way. Please talk to us afterwards about it. So why Tangerine Dream? I saw this. So you've got two raging populists, as you can see. Piers Morgan actually even refers to the colour and how he looks like that. But as we all know, one is a shameless populist that likes talking about himself and regularly puts his countrymen in danger, and the other one's Donald Trump. So what is populism? Populism, as P.J. O'Rourke, the US commentator, makes, is neither good or bad. It really depends where you are. As many of you know, unbelievable as it is with my physique, I'm a rugby referee. I regularly have to go down to the fine city of Dover. As regularly reported, the fine people in Dover actually voted for Brexit, and nobody could understand this because they said, well, that doesn't make sense. You're a big port. You're going to lose business. What they didn't understand was when the customs checks went away, they lost jobs. Customs houses shut down. Obviously, VAT jobs disappeared, various other things. So for them, it made absolute sense to bring those checks back. Obviously, for some of the other people in the country, that means higher costs. So it really depends where you are in society. And that's the key thing you need to remember about populism. It sort of depends for who fits and who it works for most in the country, and why are we seeing that drift. But the really big takeaway from it is this isn't new. We have these periodic, what they call realignments, political realignments, where the political parties find that actually the sort of centre ground has shifted, where the bulk of the population feels about things is very different. And then you get this wild scrabble to kind of realign themselves with sort of new voters, new policies that make sense. Probably most famously, and within living memory, some of the people in here, was the period from 75 to 83. So you effectively had the sterling crisis with the UK going to the IMF, and often these political realignments start with a crisis. And then you had all the uncertainty, the winter of discontent, a lot of political unrest before you finally started to get the new, and at that stage, relatively right-wing view about this is how we get the country going. All the way through this, I'm not making any value judgments on either side of the parties. As many of you know from my CV, I've invested money all over the world. I've been familiar with politics all over the world. I find US politics deeply strange, but very important for us. But the key thing is certain things will ease populism. Certain things will make the country go faster. Other things might not. And it's a value judgment for our country about what works best for them. There we are. Probably the most popular common image for what is regarded as populism in the UK. So allegedly, this bus driving around influenced millions of people to vote that way. Unfortunately, it's not true. You can actually see the change in voter perception and sort of general population perception for some time beforehand. As I said, most things tend to start with a crisis, and they often end with one as well. And the crisis that triggered a lot of the problems with the UK, as you can see, effectively all tends to come back to the economic situation. And that's why it's important for investing, it's important for your business, it's important for your capital and various other things. The UK was doing relatively well in terms of the growth states, and then there was a decisive break in 2008, which apparently something quite important happened. Since that point, there has been a serious detachment for trend. So anything about Brexit or even COVID is very difficult to see in a lot of the numbers. But the one thing you can clearly see is basically there was a break in terms of UK productivity. Now, Professor Paul Krugman is a very good friend of the firm. And as he said, productivity isn't everything in the short term, but over time, it really matters. It's doing more things with less inputs. And as you can see in the case of the UK has started to stagnate. And in many cases, actually, GDP per capita, which is a sort of measure of income per head of population, has started to go down. That generally makes people very, very unhappy. Unusually, it's continued to trend up in the States, but there's some slightly different factors with that. But again, we know that France almost voted in a far-right government. We know Germany's having serious political problems. Italy's basically voted in a former fascist government. And it's all, to our mind, linked back to basically this GDP stagnation. So what's happening? Well, the first thing you can see is it's actually happening in lots of different countries. It's not particularly unique to us, but we have done some really unique things compared to other countries. So there's a long list I won't read out there, but one of the key things is the UK is massively underinvested. So just for audience participation, when did we build our last reservoir? One of the things that always annoys us, despite living in a seriously soggy country, and we seem to have a hosepipe ban within about 3 weeks. Yep, over 30 years ago. The last reservoir was built in 1993. There's 8 million more people since then. We've had lots and lots of problems with planning, and I'll talk about that as well. But the original Jubilee line had a 400-page planning application, which went through, and that was all the considerations. The new Silvertown Tunnel, the planning application is just under 500,000 pages, and actually, if you put it end to end, it's longer than the tunnel itself. So I think we can all appreciate once you get into that level of planning, it's very, very difficult to do things quickly, cheaply, or efficiently. Regulations become increasingly excessive. My compliance officer is in here, but I would still say it's safe, and I'll make some points later on, so she'll be happy talking about regulation. Our trade policy was a mistake. I'll explain why. And we've got problems with capital markets. The key thing is, actually, some of the stuff we can fix relatively easily. We do create lots of really good, innovative companies, but one of the issues you've got, which Rachel Reeves rightly identified, is they don't actually come to the UK capital market. They often go elsewhere, got bought by foreign firms. And finally, the immigration of the last few years has started to become a problem. And you saw this last week with the Office of Budget Responsibility, who've worked out now that net immigration costs about £150,000 per person in terms of net costs to the country. So again, like most things, some of it's good, too much of it might be a problem. The OBR now thinks it's a problem. This is just a quick thing. I won't spend too long, but it's just about planning. It just shows that we used to actually build quite a lot of buildings when we had to. But we introduced the Town and Country Planning Act. Who thought you'd come out to lunch and understand the 1948 Act? But it was partly to finance the building of the new towns after the war. And that completely disincentivized local councils to sign off on planning because they got no benefit from signing up on planning land. They got no benefit from various other features. So in a way, it helped because the government could start building these fabulous new towns. But that's what they wanted to do at the time. And since then, some of that policy has had really long-seated problems since then. And we've just added to it. So on the right-hand side, it's just an example of just how bad housing's getting at the moment. So if we just look at the little, I got it from Savills, so apologies, I don't think it's the most obvious chart. But the key thing is if you just look at the little blue lines, so what it's broadly telling you for every house we have built in London, 3.4 people are turning up in London. Same with the Southeast, same with the East Midlands. So again, apart from the Northeast, if we can get people to move up there, we're just not building enough houses, and that has upward pressure on rents. That's what this chart's telling you, and it has upward pressure on social pressure when people can't find affordable homes. So again, you can see why the government's talking about it, but the problem that I have with the government policy, on one hand, they're talking about getting rid of a lot of this planning restrictions, but then they're bringing stuff in about green regulation, which you might think is a value worth having, but it basically reintroduces a different set of legislation that will have exactly the same problem. So right idea, possibly the wrong solution. This is energy. There are no high-income, low-energy countries in the world. And you can see one of the things that we've done, we went from the 1960s having more nuclear reactors around than the rest of the world combined. Amazing fact, more than the Americans, French, Russians. But we had a lot of this, and we had cheap electricity. We obviously haven't been renewing that. We benefited from more sea gas. We didn't basically renew any of that fleet. If you want a modern economy, you are going to have to use a lot of energy. I don't know if anybody saw the announcement yesterday. AI uses an amazing amount of energy. So Google has signed up with a deal to have nuclear reactor power directly pumped into their AI servers going forward. Microsoft, I think it is, has already done that deal with Hinkley Point. So we're not even keeping up with the electricity costs. The nuclear reactor plant isn't finished, but Microsoft's going to have first dibs for their data centers. Again, broadly the right idea for the government. They want to kind of produce and bring energy costs down, but I would argue the stuff that they're bringing in is unlikely to do that, and it's going to do it in a way that's probably not optimal. Nuclear seems to be about the only thing that's going to fix that, but as you can see there, it costs roughly 4 times as much to build a nuclear reactor in this country to South Korea. Even if you take the case of France or Finland, and as we know, Hinkley Point is a French design, yet somehow because of high planning, high safety costs and everything else, we've massively added to the costs of it. So again, they're going to have to resolve this going forward. But again, it's a solvable issue. It's not like you don't know how to do these things. It's just we've made these decisions. But until you fix that, high energy costs are going to be a problem. And the great British energy company that's being championed by Mr. Miliband isn't going to work either. An idea so good that to save taxpayers' money, it needs £8.4 billion of money to make it work. So I'm not an expert, but that doesn't sound like a great idea to me. And the final one I was just going to talk generally is just about trade. So this is the UK trade policies. We know we had a financial crisis in '76. It's that tiny little dot that you can see, which we recover from, get our finances back in order, and then we sign a series of trade deals. And unfortunately, these trade deals don't necessarily work in our favor. So you're beginning to see in the US, who is in an even worse position than us in terms of trade deficit. So this basically shows you how much we basically import to how much we sell. And the other way to kind of think of it is to finance those purchases, you have to sell something. So whenever you hear about the global financial crisis, why did German banks end up owning loads of US mortgages? Or why did German banks end up loading lots of Italian debt? It's because that's what they accepted on behalf of German companies to help finance that deficit. Saying, why does China have so many US treasuries? Because that's what they accepted to finance that. In our case, we tend to sell real estate and companies to finance the bulk of that debt, which makes the problem worse. It pushes housing up because you've sold a lot of housing stock and office stock to other people. And you've also sold a lot of productive companies to foreign investors, which is great potentially in the short term, but it again removes your industrial capacity in the medium term. And you can see exactly what's going on in the States at the moment. They're bringing tariffs back because trade isn't working as it's meant to. This kind of imbalance shouldn't occur. Keynes tells people back in the 1930s, when you get these kind of financial imbalances, you will get financial problems later on, probably in your banking system, and it is one of the big drivers of the Great Depression. So one of the reasons we've got issues with inflation and the Chinese have got problems with deflation, or the Germans have got problems with deflation, is we're going to have to find ways to pay for ourselves and produce things ourselves going forward. They have far too many factories to sell stuff to people like us who can't really afford to pay for it now. So again, fixable problem, but it's one of the contributing factors. The political centre shifts over time. So Conservative Party policy, this was the Conservative Prime Minister for most of the 1960s. Conservative Party policy was to oppose nationalisation, which they did through the 20s, 30s and 40s and into the 50s, and then they gave up. So when we actually get Thatcher basically privatising everything, you actually get a Conservative Party leader coming out saying, well, actually, this is really unpopular. You shouldn't be doing this, even though the political centre had previously been pretty much against it because they overweighted their recent experience. The simple thing is the political centre shifts. Margaret Thatcher didn't win elections because she was particularly of the centre. She made a distinct step to the right. So that's why you get these remarkable comments with people with absolutely no introspection, like Theresa May, saying UK elections are won in the centre ground. They're not, actually. You get very big majorities if you can get something in the high 30s. So that's your core base and a few other people. If the Conservative Party is going to be more successful, it will almost certainly have to take a shift to the right. It has done this twice in its backdrop as a history as a party, and twice they've managed to get the economy going. There is a social cost to that, and that might be the social cost that the majority of people, the populist view, is one that they're prepared to take. So I wrote a note. I won't go through this, but it's basically the new political divide. And you can pretty much work out where all the parties need to sort of shift to. So Labour has a problem because it's got basically four big voting blocks. You could see this problem during Brexit, that basically the four voting blocks have got very different ideas about the world. So Labour's going to have to make a decision at some point about whether it wants to support its cosmopolitan voters or its historic core nationalist collective, the kind of old working class vote that they used to have. It's a little bit easier for the Conservative Party. They basically have to not get invited to dinner parties in London going forward. You saw they pretty much managed that in 2019, but then they've allowed quite a large right-wing competitor to come in and splits their vote, which led to the recent outcome. The right-wing competitor, they probably have to take a step to the left on the economic side of things, because a chunk of the voters they're trying to attract, which is national collectivists, old white-collar sort of blue-collar votes, probably don't want to sign up to a Thatcherite agenda around markets. So again, you can see they're all going to have to shift one way or the other, and it's going to be unpleasant for some of those incumbent politicians. But the ones that kind of get to the biggest amount of votes were the ones that will succeed with their view about how the country should be run. And as I said before, we've managed it before. We had a fairly dismal 1970s. Then we had a lot of economic restructuring, very painful in the late 70s, early 80s, as people know, and it accelerated the UK growth rate. There was a price to pay for that. There was a social price to pay for that. But one thing it did do is anybody that's got memories or has studied the 1970s will remember there was a lot of populism then, and it largely started to disappear in the 80s and 90s as people started to make money and they felt their futures were getting better. So what's happening in the market? Well, there was a massive crash this summer. So I'll feed this all back into one final part, but there was a massive crash this summer. I'm sure you all remember it. The Japanese stock exchange was down nearly 15% on one day, and it all recovered. And this chart is basically telling you the level of stress. Think of it a little bit like a Richter scale in markets. So you can see there's a big spike in 2008, which is obviously the collapse of Lehman. There's another huge spike in 2020, which is COVID. And we've had a spike this summer that was bigger than the Asian financial crisis. It was bigger than the dot-com crash. And it's pretty much something that we had expected. But it didn't last. And I have to be honest, I've never, ever, ever seen that before in my entire professional career. But what it is telling you is often it's a sign of impending instability. As people have been here before, and apologies if you hear any of the jokes going, but for people that have been here before, they'll know that we are deeply skeptical about the market. We think we're in final stages, but every time we think the market's going to slow down, we see the government injecting more liquidity, particularly the US government, which keeps pushing things along. Again, over the summer, we had this remarkable, basically, earthquake, and then it disappeared without causing damage. Again, and that leads us to feel that maybe we're not at the end, but it continues to be time for why we're a little bit prudent and cautious about things. And the problem with injecting money into the economy is there's some track record to it. So the Federal Reserve has started to cut rates quite aggressively, more aggressively than, again, we thought would be likely. The Bank of England has started to cut rates. In fact, Andrew Bailey opened his mouth yesterday and talked the pound down, saying he's going to aggressively start cutting rates, which probably means we're due a huge burst of inflation. But that's actually what history tells you. In the 1970s, the Fed cut rates early to try and get Nixon, an unpopular US president, re-elected. It succeeded, but it reignited inflation. We are a little bit concerned that by the end of the year, and certainly into next year, that is the risk they've decided to run. Maybe they get away with it, but it's something that's worth watching. There is a high probability to our mind with tariffs, potentially Trump coming back in with massive government expenditure, and a basically central bank that's prepared to pump into cash at the shortest notice, that yes, asset prices may remain stable, but you're running serious inflation risk. And it's the same with the UK. I could have shown that chart, but as we all know, the US decides prices. No, I'll tell you what we've been doing in the portfolio. As you've seen, and people have chatted to us, we said that we'd probably sort of drift along during summer and then have a strong end to the year. Why is that? Because we were expecting quite a lot of volatility. We put a lot of stuff in your portfolio that will react with volatility, as you've seen some of the Chinese stocks we thought were deeply undervalued. They've done very well. We've put a lot of commodity-related stuff, energy-related things as well. So we've designed a portfolio that we think will keep track roughly within the market with some volatility, but as things start to get more and more choppy, as you can see, things have started to perform. Over time, if we're right on that inflationary side of things, what you need to be looking for, again, are assets that have the potential to reprice quickly with inflation. So just to bring it all back, yes, politics are changing. The future nearly always looks certain. I know there's a lot of negativity, but it often does before there is a sharp change. It's not just us. There's a lot of changes going on globally. I could have shown you a chart about how bad things are in France, but their debt has started to trade even at an even bigger discount than Spain's, which is never a good sign for long-term finances. They basically owe as much money as the US. They've got an even bigger deficit than the US at the moment, and they're locked into a currency union. So tricky few years, and you can totally understand why they've got populism. German economy's gone stagnant. You can understand why they've got populism. The US is the biggest deficit country in the world at the moment. You can understand why they're getting populism and talking about bringing jobs in there. The key thing in the case of the UK, many of the hard things we've actually done. Fixing energy, fixing planning, all this kind of stuff. It's not like you have to create a university sector that can create world-class companies or indeed create those world-class companies. Not like we have to create deep capital markets. We've already got them. It's about revitalizing them. So in many ways, it's really, really positive for us. And the key thing just to remember from your portfolio is we've skewed things at the moment. We still think we're in the final stages of basically a rally. We still think it's got a little bit longer to go. But as you can see from the performance over the last few weeks, it's one of those things that tends to do very, very well when things go very badly. So that's kind of the key things. And with that, that's the end of my presentation.